Hi everyone, and welcome to the webinar. And for those of you who were with us earlier today, this is the second of the day when we usually sort of have a look at what is likely to be happening in the US markets. But obviously, with it being the 4th of July, everyone with any sense is having a lovely holiday. And anyway, you are here, we are here, and we have got some things to cover, because there's always something to say about the markets, even when most of the markets are maybe closed. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be very, very risky, so please don't ever use money that you cannot afford to lose. In case this is your first time with us, this is me, Anna, and I'll be running the session together with my husband David, who's sitting 2 desks away from me. We will be looking at the markets and the charts through the prism of volume price analysis, all supported by our really fabulous quantum trading tools. Now, just in case VPA, volume price analysis, is something that maybe you've kind of heard of, or you maybe know a little bit about, or you don't know anything about. It's the methodology, it's the means of analyzing the chart and the price action using volume that David and I have been using, well, goodness, almost 20 years. The methodology is now detailed in books that are on Amazon, and for Forex, what we've done, we've put the books together in what we call the Complete Forex Trading Library. It is the digital version, by the way, and it's $9.99. As I said, VPA is how we analyze the price action using volume, but for the Forex market, and indeed all the other markets, the chart is just one element, but I know there are traders who look at the chart and nothing else. They say everything you ever want to know about what is happening on any market or any instrument is reflected in that chart. And, to an extent, that is absolutely true. But in Forex, and I would say in any, whether you trade any other market or as an investor, you really have to know a little bit about the fundamental drivers, and in Forex, what the release is, what their significance is likely to be, and how they're going to impact the price action that is going on the chart. But David and I, we take it one step further. We call that a 2-dimensional approach. We have a 3-dimensional approach. And what we have is we have a third strand, which is what we call relational analysis, and that is looking at the other capital markets of bonds, equities, and commodities. Forex sits in the center. Forex actually draws all of them together. It's where the money flows, and it flows fastest in sense of moving from one asset class to the other. But what it also does, it then tells us what the sentiment is, maybe in some of the other markets, such as equities. So we know, for example, if the Japanese yen is being sold and being sold heavily, then equities are likely to be rising. Now, I have to caveat this at the moment, because a lot of relationships that have stood this, that have been sort of going along quite happily for months and years, lately there's been a bit of a disconnect. There's all sorts of, there's a bit of weirdness going on in the markets. Some of it to do with politics, in fact most of it to do with politics. So for example, the gold is doing really exceptionally well. Now, that has a close relationship with the US dollar under normal circumstances. Generally speaking, if gold is going up, the US dollar is falling, and it's patently not happening at the moment. Now, admittedly, it's the 4th of July, markets are very thin, the dollar's really not doing very much. So these relationships, these correlations, they do kind of, fall out a little bit, but here we're talking over the longer term, and over the longer term, they do tend to stack up. And all this is explained in our Forex program, where we cover in great detail the technical side of trading, but also all these other elements that will hopefully turn you into what we call a complete trader. With regard to the tools that we've developed, these are the 4 in the tool set that are specific to the Forex market. We have the currency strength indicator, the matrix, the array, and the heat map. In this session, I'm certainly going to be focusing on the strength indicator and the matrix. I've got them set up on different charts, but on the profiles of my MT4 platform, I use these to start off, as it were, and then I tend to move on to the array and heat map. But I just want to focus on these two in this particular session, because these indicators tell us an awful lot of what is happening in the market at the moment, what has happened in the past, but more importantly, they also point to what is likely to be happening in the future. And just very quickly on the indicators, I'm just going to cover them in the introduction. You can buy just one, you can buy a bundle, or you can buy the full package. All indicate, if you do buy the full package, it comes with all sorts of advantages. One of them being that when we develop future indicators, they're automatically added to your package. So you only pay us once, basically. You get 24/7 support. The indicators are yours for life, and price includes all upgrades. Now, if you buy one indicator and then you want to upgrade to a bundle or the full package, of course, you will always get a credit. But whatever you buy from us, whether it's a single indicator, a bundle, or the full package, you have a 7-day money-back guarantee. And at the moment, the platforms that we have available for the indicators are MetaTrader, NinjaTrader, and TradingView, but we are working on TradeStation. You can, if you want more information, if you just hop over to quantumtrading.com, there's tons of information on the indicators, videos, written documentation, and of course, all the prices. Can I also say about the prices? We do, as I said, there are bundles. We kind of try to think of bundles that traders might like. But if there's something there that isn't costed out, just drop us an email. That's if you email David at quantumtrading.com and say, hey, I've looked at what you're offering, but I actually the combination that I want isn't shown. We will always give you a special price. And as I mentioned earlier, the education program, it's the complete Forex trading program. It does include the full package of trading indicators, and you have to opt for which platform you want the indicators to run on. And as I said earlier, whatever you've bought in the past, you will always be credited. And as I said, it's the program we've put together is really to turn you into a complete Forex trader and to help you trade with confidence. The website for that is quantumtradingeducation.com. And you can email either myself, annacooling.com, for more information, or as I said, David at quantumtrading.com. And this is my personal site, annacooling.com. Lots of information on there, all my analysis, and the information, also the posts that go up on the various Facebook pages that I currently run. I'm just going to stop there, get my charts up, and I'll pass over to David.
Hi everyone, good to have you with us today. Absolutely glorious day here in the UK, and glorious sunny Hampshire. I hope it's lovely where you are too, and good to have you along. Sorry, the reason I was slightly delayed there, I was actually hunting around on the charts looking for anything that's moving more than, well, actually moving would be a good description. I'm sure you've seen what the markets are like today. It's pretty thin. Everything's trading in a pretty narrow range. Some markets are open, but quite a few are closed. And we've just opened up just to see what we can pick out. And I'm going to pass back to Anna. If you have any questions, if this is your first time coming along, if you have any questions, please just drop them in the chat box. We're happy to answer them there for you. And if they're longer questions, we'll answer them on air as well. I'm going to pass back to Anna. Anna's got MT5 up. I've got NinjaTrader running. And we'll just see what we can see.
Okay, the reason I've got it's really just a follow-up. If you weren't with us this morning, if you want to catch up with the recording, it kind of gives you more of obviously the background, the backstory to what we did earlier, and the recordings will be up on my YouTube channel and also the YouTube channel for Quantum Trading. And one of the pairs, well, let's start with the currencies. The individual currencies that we were looking at this morning was certainly the British pound. There was there was some rather nice buying of the British pound in it sort of started early doors, didn't it, David? We started at six o'clock this morning, and as I said earlier, the first port of call when when you come to your trading terminal is something. If you don't have the currency strength indicator, well, not the quantum one or a similar. We are promoting ours, of course. We've developed it ourselves. I'm often asked, actually, do I know of a free one? And there are. If you Google free currency strength meter, currency strength indicator, you will find them. And I'm often asked, well, what do I think of them? And I would certainly never diss, other software tools that are out there. The reason I don't recommend them, all I say is you try them, see for yourself, is I don't know what's gone into them. I don't know how it was put together, what's the algorithm there. This is our indicator, it's our algorithm. We've developed it, we spent many years developing it, and we know that it works. And it's not just for us, but all of the hundreds of traders out there who have actually bought it and are now, very, very successful. So that's where we start. And the reason we start is we want to see what is happening with the individual currencies, what's being bought, what's being sold, before we even look at the pairs. Now, what I've actually done here, I've actually put two indicators on the one chart. You can have them separately, but what I've found is by putting the matrix above the CSI is, after having looked at the individual lines, and this is the 30-minute chart, and I have the 30-minute chart because it's one of the charts on this particular profile that I have, and I'm just going to quickly show you. What I have is a Renko chart, I have a 3-minute chart, and I have the 30-minute. It could be an hour. I just happen to use the 30-minute. And really, this is my sort of trading horizon, if you like. And this is what I'd be looking for, trading opportunities. So I start here, and this morning, as I said, we started just before 6 o'clock. There'd been some nice moves in the British pound. But what was interesting, this is the let me get a trade. Let's have a look, a drawing tool, because it's quite interesting. Let me see. Let's just try the pen, see what happens. Right. This is where we were this morning. Well, that's not very good, is it, David? Can you see that?
I can.
Yeah. Not very good. Oh dear, these drawing tools are not very good, are they? Let me erase all drawings. Okay. Fine, I'll move that away. I just use my cursor. Essentially, there we are. That's it. Because it's the 4th of July, and in fact, some markets closed yesterday, didn't they, David? They closed down yesterday at about lunchtime. Yeah. What we could find was the pound that was rising and the yen, because what we're looking for is divergence. When we have divergence, we know there is movement. There is a trend somewhere in that pair. When all these lines are moving together, it's congestion. So what the CSI does, it not only highlights trends, potential trading opportunities, but also tells us, well, hey, you don't really want to go and have a look at that particular pair because there's nothing happening there at the moment. And this is why we focused on the pound yen. It's covered in the recording. So if you want to catch up and see what we actually looked at on the charts, you're more than welcome to do so. So that was what we looked at this morning. Now, what also happened this morning is that you can see here this white line. This is the New Zealand dollar. That about sort of half an hour into the webinar, David, 45 minutes, there was this. It had kind of been drifting lower, as we can see here, the New Zealand dollar, but it was very, very wavy. And then suddenly it really just sort of seemed to collapse out of sight. And in fact, there were some really nice trades against the yen. You can see the cross here, and also against the pound and against the euro. It was really pretty much being sold against everything. We've had an attempt to rise, and now it looks as though it's falling once again. The Aussie also followed it, but the Aussie doesn't seem to have been battered quite so much, and that's actually turning up. And what's also very interesting about the CSI in this time frame is, can you see the number of currencies that are actually on a sell at the moment, although the pound looks as though it's turning up, versus the ones here at the bottom which are on a buy. In fact, the only one that's on a buy at the moment is the Aussie, David, is that right? This is actually quite unusual, and it's really a function of the sort of lack of liquidity and thin markets that we have at the moment because of the holidays. Makes finding an opportunity tricky. Doesn't say it's not impossible, but it also tells you there's not a lot of activity. So you may, on days like this, just step back from the market. So not only do we have to be aware of session times, session crossovers, but also there is seasonality to trading as well. The marketing hype that this is 24/7 market, trade anywhere, anytime, any place. True in principle, but in practice, you have to be aware of what's going on the ground at any given time. So then we go back, then we go and look at the currency matrix. Let's just pop that up. Let's take that back there. You can toggle the individual currencies on and off. You can toggle the individual currencies on. So for example, we've got the euro, that picks up all the euro pairs, and it gives you, again, an instant snapshot of what is going on in all the euro pairs, which ones are moving, which ones are possibly at a point of reversal, but also which ones are doing nothing. In other words, they're in the middle here, so they are probably in congestion. And as I said, if they're in congestion, may offer an opportunity for a breakaway trade from what we call the volume point of control, or you wait until you get an extreme and perhaps you look for a reversal. Is there anything else you want to add to that, David, before I go to the charts on that one? No. See if you're okay on that? Yeah. Okay, David's looking at the so to get back to the New Zealand. What we had this morning, for those of you who are users that are in the room, we've had an update to the Renko indicator for MT5. There was a little bit of a bug in it, which was really annoying. For some reason, the template and the indicators wouldn't hold onto the indicator. So our tech team have been working on it. They actually worked on it all night, and it is now working beautifully. Now, what Renko does, the advantage of having a Renko chart, which is a non-time-based chart. If you don't understand Renko or anything I'm saying at the moment, please don't hold back. You know, as our old teacher used to say, no one is born knowing. But a Renko chart looks at is presented on the chart purely through the prism of price action, and I just want to see what the value of each of those blocks going through. And at the moment, it's set at 2.4 pips. If I just explain a little bit about this indicator, because it is absolutely phenomenal. And here we are. And I use it in conjunction with the time-based charts. Now, what we have here, this is, as I said, it's a Renko chart. You will see it won't have wicks to the tops of the bottom of these candles. They're not really candles. Renko means brick in Japanese. Each one of those bricks will be completed once a set number of pips goes through the market. And the indicator works in two ways. You can either set the value yourself. So you could say, okay, I want one of these bricks to print every time 2 pips goes through. Whatever you know, 1 pip, 2 pips, 3 pips, 4 pips. It's entirely up to you. Or the indicator also comes with the option to use the ATR function, which essentially it calculates what is the optimum value for those pips. I actually sometimes have a chart with both, so I have a fixed value, and other times I will let the ATR run as well, just to see what you know, what is the difference. And if sometimes there's a difference, and sometimes there can be an appreciable difference. Depends on how the market is moving. But this was this lovely move higher, as I said, with the pound was moving higher, and it was really driven by this heavy sell on the New Zealand dollar. And the reason it's such a fantastic indicator is because with the trend dots turning blue and the and the trend monitor turning blue, when they are really matching up very, very closely, you could use that as a potential entry point. You also use it as a potential exit point. But it's the bit in the middle which is the really clever part, because what it does in only looking at price action and pip value, it removes the noise from the market. And it just helps, but you, as I said, is only really used, I only ever use it with a time chart, because we still need to look at what volume price analysis is telling us, what are the candles doing. And in this move higher, you can see the number of times the volatility came into the market. We know because the volatility indicator was triggered. That means that the price action on this candle was outside of the average true range. What happens with volatility? Price will retrace, and it will either congest or it sometimes will reverse. On this occasion, and in fact, it pushed higher. When you look at the price action on the Renko chart, it kind of, what the Renko does, it absorbs that volatility and moves it higher. But when we get a little bit of congestion on the time chart, it will pick that up too. But we did have a reversal here, a little, we had volatility back into the spread of the candle, and then we had a reversal. But then look what happened. Although it cleared, looked as though to clear the bottom of that candle, little hammer came in, ton of volume underneath it, and away we go. Another injection of volatility on a lot of volume, a little bit of a retrace, so up and up and up it went. And this reversal here is what we have that we see on the Renko. Now, what has happened subsequently is this. We have this awful sort of washing line. This is the volume point of control, and this is reflecting really there isn't a lot of movement in the market at the moment. What would normally be happening is the market would be waiting for the New York traders to join in and sort of saying, is it going to carry on higher? Is it going to reverse? You know, we would be making those kinds of judgments. But because of the holiday, really not a lot is going to happen. What I also want to mention finally, before I move over to David, is this is the 30-minute chart. And what's interesting in the move higher that we saw this morning, this is captured in these two candles. So we went up and up. This is a 1 hour, the half an hour and half an hour. That is captured the whole of that move that we saw on the Renko and on the 3-minute chart. So that is an hour of price action. 1, 2, we've had 4 hours of price action subsequently. It's gone into the spread of the candle. We've had a shooting star, and basically we are going nowhere. And this is what you have to understand about volatility. It is a compression of time, and in that time you can either you will have a massive move in a very short space of time, and a lot of traders, that's what they like to try and capture. They like to capture these huge explosive moves, and having the volatility indicator, at least you know when that move is likely to come. If we move back onto this chart and look at the 30-minute, we have another really nice example of volatility in the move lower, which actually was instigated from a breakaway from the volume point of control. Our volume point of control is that area on the chart where there is price agreement. The chart is in balance, if you like. The traders are kind of trading around in a range. At some point, the market will move, because market doesn't stay in balance forever. You have to have a trend either one way or another. So we had a breakaway on volatility, retrace back in, looked like it was going to perhaps reverse, but then once it had cleared the bottom of the candle, it did actually move low. We had a low volume because that was in Asia. We had a pickup of volume. Then we had this big candle coming down here with volume. This was the stopping volume and the hammer candle. And then we started to have the reversal, which coincided with, as I said, the buying in the British pound, which then carried on into this morning in the European session. But these are the two candles. So this is what you have to bear in mind. So when you look at a chart sometimes and you see a huge move. This isn't a very good example. It's on my Facebook page, and you look at this great big long trend and you think, oh, I wish I'd missed, that was a fantastic move. That long trend may only be 10 pips, whereas a very short move earlier on or maybe later could be like 40 pips, but it could be encapsulated in a couple of candles because of volatility. Right, that's all I've got to say. Any questions, let me know. David, can I move over to you if you want to add anything to that? Yeah, I've got a couple of things to say on the fundamental side, particularly to do with the US dollar, but I'll wait until I'll give David a chance to say something.
Thank you, darling. Just switching over to Ninja. Just slide the chat box out of the way. While Anna was talking, going through those charts, I was just been hunting around, looking for anything that's really moving in really any way at all. I've got the Euro Swiss up here, which is not one I have to say that I would generally focus on, but there's a I'll say a modicum of Euro selling and Swiss franc buying, but there is a gentle move developing in terms of a trend on that particular time frame. I've got from the fastest, I've got 30 second at the top left, I've got 2 minutes in the middle here, 5 minute on the left, and then down the bottom I've got the 10, the 15, and the daily. And I suppose to put everything in context, if you pull up the daily, I'll just pull that out a little bit. There we go. This is where we are at the moment. And that's pretty much what's happening on all the charts. Been into commodities, there's bits and pieces happening here and there, but essentially it is pretty thin. Generally on days like this, Anna and I wouldn't trade because it's too sluggish, the markets are too slow. If you are going to trade on such days, then the only way of doing it really is to move down to these very fast time frames. I'm not suggesting it's the only way, but it is certainly one way. This is 30 second, you might go down to 15 second. I mean, bear in mind when I pop that chart up, the move that we're seeing now develop away from the volume point of control here. We went through this area of what was platform of support and is now obviously a ceiling of resistance. This is only a handful of pips. This is 3 or 4 pips. So it's, looking at it, you think, oh my, okay, well, that's a decent move. Well, from, this is only 25 down to 20 here. So this is 5 pips up to the top here, maybe 10 pips on the whole of this chart. So it's, that's how tough it is at the moment. That said, when you look at the volume profile associated with it, volume is relative. So the fact that volume is very thin today, you're still comparing volume with volume. So when you look at a volume bar like this, for example, under a widespread down candle, this one happened to have volatility with it, but nevertheless, you're looking at that. What is that indicative of? It's indicative of selling. Now, the selling volume per se on a normal day may be considerably higher than that, but because everything is reduced, so everything is comparable. So you can compare this with what is going on through this region. You are, in other words, you're comparing like with like. So you've got your low volume bars, you can see them here. We have this little, attempt to rally. Does that look strong? No, it doesn't. Why? Because the volume's fallen away. Price spread's gone up on the first one. That's okay. That looks, a positive sign. Then we get this tiny little one. Volume's fallen away dramatic. It's in agreement, but nevertheless, volume is falling. Then we start to see the downwards sentiment take hold again. You get to a candle like this, markets try to rally only a tiny way, obviously. Everything's in sort of micro level here. But again, you've got very good volume under that. So clearly the market is not in a buying move for this particular pair on this particular time frame at this point in the session. Next candles, positive in terms of negative sentiment, if that's a slightly tautologous way of saying it. But you've got a down candle and you've got a good volume under it. So clearly, the buyers are lacking. We then get into the next few candles here. Where the market's tried to rally, good volume under that one, but a very narrow spread of price. So again, it's clearly signaling weakness. This is a very fragile, weak market, albeit it's operating under thin conditions. And that's really, it encapsulates the way to read volume, whether you're trading in a rampaging bull or bear market, or whether you're looking at the markets which are very thin as they are today. Volume price analysis applies to all instruments in all time frames. Doesn't matter what the instrument is. All you need is a price chart and a volume associated with it, and you can then read that. The trend monitor here, you can see what's nice about the trend monitor is the reason we developed the trend monitor was very simply to try to give you confirming signals as to when a trend is running out of steam or when it is actually reversing. And these are the regions that are the most powerful, because when you're in a strong position and the market maybe congests like it has here, or maybe even starts to reverse a little, maybe you get a pullback or whatever it may be, the trend monitor then looks at that and is trying to decipher the strength of that reversal, congestion period, whatever it may be, and whether it is actually a genuine change in trend or whether it's simply one of those phases which comes in all price action. And what it does is it changes to these transitional colors. You can see it here as well. And the benefit, the major power of the indicator is actually holding you in to maximize profit from a trend, because once the trend's underway and you're in and you've got some decent profit in it, then the market starts to reverse. That's when most traders get out, because they're frightened. They're fearful of losing something that they'd already mentally banked. And as that starts to drain away and they start to see maybe had $100 and then maybe it's 90, then maybe it's 85 and then 80 and 75, that pressure increases all the time. What happens, you close out and ultimately generally find the market moves on in the same direction, unless it is a full-blown reversal, which is part and parcel of volume price analysis and all the other indicators. So what the trend monitor does is it gives you that heads up, and it helps you to stay in that position to manage your emotion, because you'd also be looking at this in multiple time frames. You wouldn't be just be looking at it in one time frame. And when you see something like that happening and it's gone back into the red again, you think, great, okay, you know, the trend, the bearish trend here is still holding good. It hasn't changed. And of course, when you overlay it into slower time frames, comparative 2 minute, much slower than 30 second, obviously. Trend monitor here is no change at all. We've just gone straight through. That's fine. Over here we're in red, and down onto here we're in red. We wouldn't expect to see any change here either. So it's red throughout the piece. And basically what will happen is, if there is a true change in trend, you'll see it signal here first. This will transition through to bright blue maybe. In part of that change sequence, this will then gradually ripple through to the 2 minute, where you might see this transition through to a darker red and maybe to a darker blue. This one might be just having a darker red at that point. But as you see that develop through the time horizons, that's also signaling to you that this is potentially a full-blown reversal. So it's the power of using an indicator with multiple time frames that is so effective. And the reason most traders fail is not because they can't trade. It's not because they don't understand charts. It's not because they haven't got good indicators. It is purely premised on the fact that of 10 trades, you can have 7 or 8 losers as long as they're small, but you've got to have 2 big, decent sized winners in there. And that's what trading success is all about, and moving forward. That really does come down to that very simple fact, that arithmetic fact, if you like, of life, of trading life, which is cap off your losers, keep them small, but then when the big ones come along, you have to maximize them. And that's the thing that most people find immensely difficult. Everybody does, because you don't want to lose something that you've got. You've got a decent position in the market, and then, oh my gosh, it's starting to move against me. What do? I think, you know what? I think I'll take my money off the table because I'm frightened of losing something that I've already banked. I've already thought to myself, great, terrific, I've got this money. I'm going to, you know, that's going to push my trading account forward. And you close out, and then ultimately the market continues on, and you're sitting there with trader regret, which is also equally damaging, wishing that you'd stayed in. Of course, it's hopeless by then because you've let the market run, and by the time you jump back in again, the probability is that it is actually getting to a true reversal point. And that's all part and parcel of the psychology and the emotion, managing emotion in trading. And one of the beauties of volume price analysis from an emotional management perspective is that your brain is actually in analytical mode all the time. So when something happens in the market, your instant reaction is not an emotional one. It's more of an analytical response to go and look at the reason why. You're looking at multiple charts. You're looking at the volume associated, the price action. Is this actually a true reversal, or is it not? You're much more calm in your decision making, as opposed to your knee-jerk emotional response of, oh my gosh, close out, I'm frightened, take what I have off the table. And that's really what it comes down to, and that's the reason, the sole reason we developed the trend monitor, to try and help overcome those emotional problems of managing a position once you're in. Getting in is easy. It's the easiest part of trading. Just flip that up again, because you seem to be moving down a little bit now. Getting in is the easy part of trading. The hardest part is actually staying in once you've got a decent bit of profit on in the position itself. We've just taking this little micro position here. You've got a nice strong ceiling of resistance in here. This is the accumulation distribution indicator, which works purely on price. What it does is it looks at the number of times a level has been tested either from above or below, and then prints that level in terms of strength, because you can see that each of these levels has a different width associated with it. And the reason it has a different width is because it's a level that's been tested repeatedly. So where you have very, very wide bands, like this one, for example, that is very strong. This one here, this maybe only have been tested once, for example, it's very light, as is this one here. This one here is quite strong because it's quite a wide band. And that is the power of the accumulation distribution indicator, because it's giving those levels visually, and in addition to that, the actual strength of them also. You can see up here at the volume point of control, this yellow dashed line, which is the fulcrum of the market. This is the volume histogram. This is the volume point of control, which denotes the heaviest area of volume on this chart, which is here. And volume also acts as support and resistance, because when you get to these regions where you've got low volume nodes, you expect the price to move through fairly rapidly. You can see down here at the bottom of the chart, we're coming down to an area of very light volume. So we would expect the market to move through there relatively quickly. So these are price-based, and the volume point of control is volume-based, but they're used in the same way in terms of support and resistance. Because if you're moving up to an area of heavy volume on the histogram, like here, for example, then you would expect the market to possibly congest and find it difficult to get through, equally as it should do at the volume point of control, where you've got the heaviest volume of all. Just pop that down again.
Okay.
There we go. So it's a difficult day for trading, other than literally scalping in and out. It's not a day for long-term holding over minutes and hours. It's just one of those days where it's a scalper's market for the time being, because they are thin, and it's just a question of jumping in and out. But the principles of volume price analysis, how to use the indicators and interpret them, is exactly the same in all market conditions. I'm going to pass back to Anna.
Speaking, I was actually looking around and seeing what whether there would be a sort of quick opportunity, and really pulled up the 6-minute CSI, and we have got some divergence here. We've got some buying of the Canadian, and we've got the Swiss franc going up as well. What have we got on the opposite side? Well, we've got the dollar, a little bit of a sell on the dollar. We've got the New Zealand go down again. We've got the yen, we've got the euro. The pound is kind of, when it's in the middle here, you really kind of, maybe sort of leave it alone for the time being. And that sort of took me to the dollar CAD. Let's have a look here. What can we see? Yeah, we can see the buying of the Swiss. Let's take that off for a second. Yeah, what have we got? We've got Swiss yen, we've got CAD yen here, and we've also got the CAD. The buying of the CAD, obviously it's the counterparty currency, which is why you've got the Euro CAD coming down, the New Zealand CAD. And I just looked at the dollar CAD, because it had a nice little example on the Renko. You can see here you've got a really lovely move higher. We've got this is the VPOC. I've actually put it on the Renko chart it picks up the as I said, the congestion areas, and we've kind of got this little breakaway. But if you look at the values here, we've got 30.74. Let's go from here, 30.70, 70.71. We're talking about, this is what I'm saying, 10 pips. Looks fantastic. Oh, look at that move. It's 10 pips, but given the market at the moment, that's actually quite a nice little trade, David. What do you think? And then how that plays out on the time chart. What have we got here? We've got the Renko at 30.72, and you think, oh my goodness, that's a fantastic move. Look at that move. It's 10 pips. Most of it contained in this volatility candle, and you could say, well, I've missed that. What do I do now? But you have to wait until there is a clearance of the bottom of this volatility candle to see whether the dollar is going to carry on lower. And is it going to carry on lower? Let's have a look at what's happening on the 30-minute. Let's have a look here. We've got here, let me just take these levels off because we're not looking at Camarilla today. Let's have a look. Here we are. We've got the VPOC right up here at the moment. It probably will at some point move further down because this is the sort of new area of congestion. We've actually got quite a nice little move in this 30-minute candle. Where is it heading down? Well, we've got this platform of support here down at 30.55. Where are we? 36. What, another 8 pips, David? 8 pips or so to go. Which is what you know. This is what we're up against today. So that's what I wanted to highlight. If you've got the Renko for MT5, I have to say we are the only people to have developed a viable working Renko option for MT5. There's no one else out there, is there, David? Yeah, so a bit of a thumbs up for us for coming up with that one. And as I said earlier about the US dollar, I just wanted to mention, let's have a look. We are in the middle of a currency wars, manipulation. Well, that's always been part and parcel of trading anyway. What does Forex Live have to say? They haven't updated since 11:30. Dollar steady, thin, quiet markets. It really kind of says it all. But I just wanted to highlight this. You probably are aware now that we talk about the three-dimensional approach to trading, to Forex trading, the relational, fundamental and the technical, but you know, politics is a huge part of it. I think Donald's got a dimension of his own, hasn't he, David? The Donald effect, basically. He's been tweeting about, oh, he's not happy with the Fed, is he? He appointed Jay Powell, but he's not happy with him. If it was the apprentice, he'd have fired him by now, because he would have done. He wants a weak dollar, apart from what was going on with the Chinese, and because everyone else is driving their currency lower. When a currency is driven lower, if you're an export nation, it makes your exports cheaper. I said that the Chinese actually wouldn't be too unhappy about that, because their currency is still actually pegged to the US dollar. So it's not sort of a black and white thing. It's not a binary thing. One's good, one bad. There's a big grey area in between what is happening between China and the US. Anyway, this is what the market is beginning to pick up on, and will pick up on more once everyone comes back from holidays. This is the tweet that came out on July the 3rd. The manipulation tree. Now this site called poundsterlinglive.com, and I've seen this chart elsewhere, has basically said, well, you know, when is the last not this chart, this is the chart, current chart at the moment, but I think they have another chart where the last time this was done, let me have a look. I found it on my Twitter feed, and in fact what I'll do, I'll take a screenshot of it, because actually it hasn't happened very often with the US dollar. They don't tend to be you know, manipulators of their currency. If they do it in you know, not such an overt way. I think the last time was 1998, 2000. It's on my Twitter feed. But what I was going to say about the dollar, there's always a story about the dollar, but this is one that possibly is going to run and run when we come back full-time trading next week. Although I have to say, tomorrow we do have the NFP. Is that it? Anything else you want to say? I think from having said there wasn't much going on, we managed to scrape something together. So thank you so much for coming today. We usually have a third webinar today, but honestly, with markets closed, we've decided we're going to that's been cancelled, but we are back with you next Thursday. So enjoy the rest of the day. Tomorrow, as I said, is NFP, so you should have some opportunities then, and then we are back next week. And next week is going to be one of those periods that I often say it's going to be very, very volatile. So volatility means lots of trading opportunities. So thank you so much for coming along, and we'll see you next time. Take care. Bye.